If you had a chance to sit in the room with 27 billionaires, 27 of the most successful investors in the world, what would you ask them? The question I ask them is, what is the number one most important decision that I need to make in regards to my financial prosperity playbook? And today, I'm going to walk you through the answer that I got from those 27 billionaires, and not only what that answer was, but how you can get that set up, once again, by watching this video today. Let's go. What's up, y'all? Tyler Devereaux again, and today we're going through commandment number 2 for your playbook for prosperity, for you to build out your playbook for prosperity. If you haven't seen commandment number 1 yet, go down. We've included the link below. Click on the link, watch commandment number 1, which will now set you up for today, which is commandment number 2. Once again, what would you ask the top financial titans in the industry if you had a chance to sit down with them? I was so grateful for the opportunity that I had to be in Whistler with these individuals, and the question that I ask is, what is the number one most important decision that I'll make in regards to my portfolio construction? And there was different answers, but once again, I'm taking the most congruent answers, and the most congruent answers, and it was by a majority, was the number one most important decision you'll make is your asset allocation. And that terrified me because I didn't even know what they meant with asset allocation. Now, if you have watched commandment number 1, I go through the different ways that I can diversify an asset allocation. Today, we're gonna go even deeper. So before I do that, I wanna give you a book reference. One of the best financial books that honestly I've ever read, I read last year, and it's Tony Robbins' book, The Holy Grail of Investing. And this Holy Grail of Investing book was so great because it talks about asset allocation. Once again, the number one decision that we'll make is this: how to diversify across 8 to 12. The whole key here is 8 to 12 uncorrelated investments. And so I went through an entire training to understand how to identify 8 to 12 uncorrelated investments. Like, for example, uncorrelated investment, like I have real estate as an example, okay? Maybe you invest in real estate. Maybe you have multifamily real estate. Maybe you have some storage units. Maybe you have some RV parks, some single family homes. That's still in real estate. Those would still be considered correlated. They want 8 to 12 completely uncorrelated assets. And that, man, learning how to do that, this is something that I'm very much still learning how to do and build, but it has been so powerful because, once again, the key, my number one outcome is net income for life. And that means that I need to be able to ride the upswings, but then have less risk on the downswings. And that is through asset allocation. So there's a couple ways to go about this. I'm gonna give you some understanding of like a portfolio construction, but at a basic level, man, you need to understand how much you're going to allocate to different buckets. Now, there are 3 basic buckets that you need to understand your asset allocation. And this is what you need to know at a high level if you're gonna build it out even deeper with uncorrelated assets. Number 1 bucket you need to fill up is what you would consider a security bucket. Something that has very, very low risk and has almost, no matter what, that thing is going to just continue to produce cash flow. Now, it's very little cash flow, maybe 4%, maybe 5%. Once again, it's a security bucket, so there's not a ton of risk, but it's at least secure. This could be things like owning your own home outright and you rent it, that would be in the security bucket. Maybe you have specific bonds, could be in the security bucket. Something that comes off the top of your income into some sort of S&P 500, pretty secure type bucket. These are things that are your security bucket. Now, bucket number 2 is your risk bucket. We call it a risk growth bucket. And once again, a lot of this stuff I'm pulling from this Holy Grail of Investing. So if you have not read that book, read that book. It is a phenomenal book. I'm gonna give you a premise of it today, which is, once again, what's outlined and helped me create my commandment number 2, which is asset allocation. But you need to also create your asset allocation. So number 2 is risk growth. So that would be, commercial real estate that I invest in. I have a lot in the risk growth bucket. I invest professionally into commercial real estate. I have great upsides on that, but there is risk associated with that as well. So your risk growth bucket, how much do you want to allocate? The dream bucket number 3 is to, well, live life. You know, that might be to buy, a luxury item like a plane or a boat, or donate a certain amount at a certain time, or buy a house on the beach, or create a nonprofit or a children's museum, whatever those things are, okay, for you. That's your dream bucket. What I really want you to focus on are those first 2 will put you in a position to benefit from the dream bucket and actually achieve the dream bucket. Now, portfolio construction, I'm gonna walk you through an idea of what this looks like at a very, very, very high level here. Here we go. Number 1 thing to consider with your portfolio construction is asset allocation versus asset location. So asset allocation could be different investment types. Spoke a lot about that within commandment number 1 in the previous video. Asset location would be, okay, is it pre-tax tax or is it for retirement? Right? Roth IRA, self-directed IRA, like these are asset location. These are things you need to consider on where your asset allocation is. Once again, asset allocation versus location. Number two is if you're investing in stocks, are you investing in individual stocks or indexing? There's a big difference there. Individual stocks, you have more risk within that individual stock. In index, lesser risk, probably lower returns as well. Are you investing in individual stocks and or the index? If so, how much in each bucket? Number three is liquid versus illiquid assets. How many of your investments are liquid versus illiquid? So for example, in the commercial real estate that I acquire, those are considered illiquid assets. I can't just go cash out of that investment. That is in there for a certain hold time to drive the business and the value of the property up. My ideal scenario would be to have 2/3 into illiquid assets. I'm in it for the long run. Illiquid assets are going to produce, there's a premium for illiquid assets. See, if I'm going to invest in something that's liquid, meaning I can cash it in or out at any time, my returns are going to be smaller. So if I'm going to invest in something where my money is tied up, I better have a premium for an illiquid asset. So once again, what percent into liquid, what percent into illiquid? For me, ideal is 2/3 into illiquid, 1/3 liquid, in case I need to cash in or cash out for whatever reason at whatever time. Number four, I talked about some of this as well, which is US based versus non-US based. Maybe you're watching this from a different country. Maybe yours would be wherever you are versus wherever you are. Okay, but here in the US, for me, is where most of my, even to this day, a huge percentage of my portfolio is US based. Once again, this year I've started to identify investments to diversify globally. So how much of your portfolio is US based versus non-US based, and that's how I look at it. And then number six is correlated versus uncorrelated. We want, once again, 8 to 12 completely uncorrelated assets. Once again, my friend, your asset allocation is the number one most important decision that you'll make within these financial commandments that I'll be walking you through. Now, some actionables for you to be able to build out this step. Number one, meet with your financial advisor, whoever you're meeting with, to assess where you are at currently, what your current asset allocation is, what your risk profile looks like. Like, are you more risk averse? Do you really enjoy investing into risky returns, or do you not enjoy that? Maybe a big percentage of your stuff is in risk and you would like it to go more to security bucket. But where are you at currently? Get an understanding of where you're at currently, and then also what's your investment time horizon. Once again, how long are you wanting to be invested for? Do you need, maybe you're older. You don't want a big, huge, long time horizon because, well, you don't have a big, long time horizon. And you're gonna invest in things differently. Let's say you're younger and you're just starting to build this money machine that you're creating. Cool. You have a bigger, longer investment horizon, time horizon. Now, number one, meet with your financial advisor and get an understanding, a snapshot of where you are at currently. For us to understand where we're going, we need to know where we are. Okay, number two, now that you know where you are, start to research different asset classes to understand their historical performance and also the risk return. So some asset classes that you should consider. Savings in a security bucket. You could have savings. How much? Bonds, cash, guaranteed investments, treasury bills. Examples of asset classes within the growth risk bucket. It could be commodities, cryptocurrency, gold, silver, indexes, real estate. What kind of real estate? Stocks, other alternative investments. And then once again, the dream bucket. These are more things like adventures, boats, contribution, cars, designer clothing, fashion, homes, islands, planes, sporting tickets, experiences, all those kind of things. All right, now actionable number three is determine your asset allocation. For example, how much are you gonna take off the top? You need to have a designated amount that you, no matter what, take off the top to put into your money machine. This is what Tony Robbins calls it, is a money machine. It's something that is producing, once again, my outcome is income for life. So I want a cash producing machine. So question number one, how much off the top are you gonna take? Is it 25%? Is it 50%? Is it 10%? How much is it? Number two is how much are you gonna put into your security bucket? How much do you wanna put into your security bucket? And then question number three is how much are you going to allocate towards your risk growth bucket? So this year I made a switch. When I did my asset allocation, when I looked at my current portfolio, my blend and where I was at in my asset allocation, I was about 70% risk growth and 30% into security. This year we rebalance to hit our new aligned goals, which is putting 60% in the security bucket and 40% into the risk growth bucket. Now, one of the reasons that you really need to have a plan in place to revisit, once again, these financial dreams and where you're at is because as you're investing and as your investments are growing, that asset allocation may be unbalanced. Maybe now, I started with 60-40, but because my risk bucket has grown so much, maybe it's grown to now I'm back to 70-30. Okay, cool. I would just take some out of the risk and put it now more into that security bucket to once again rebalance my portfolio. So once again, question number one, how much are you gonna take off the top into your money machine? Question number two, what percent into your security bucket? Question number three, how much into your risk growth bucket? And then actionable number four is to identify some investment vehicles that meet your target allocation, your criteria for fees, diversification, performance. Once again, your core four or your five to thrive, whatever your rules of investing are. And if you don't know what those are, that's because you skipped commandment number one. Damn it, go back and watch it. Once again, the link is in the show notes, okay? But if you know your outcome, then you can identify, does your asset allocation line up with those outcomes? And that is what commandment number two is all about, making sure that your asset allocation, once again, the number one most important decision you'll make, is in line with your target outcomes. All right, my friend, hopefully you pulled some value from that. Maybe you needed the whole thing. Maybe you've never even thought of asset allocation. Maybe you just need a piece. Maybe you need to rebalance, whatever it is. If you found some value, I would love to know what that value is. Leave it in the comments, let me know. Also share. If you found some value here, share this with somebody else. It's the only way we grow, man, is you sharing the show. So thank you. God bless you to all of y'all who share these episodes, these shows, because man, that's how we grow and how we continue to provide value. People like you. All right, my friends, I will see you on the next video for the rest of the commandments that I will walk you through so that you can once again build your playbook for prosperity.